Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Wednesday, April 30th, 2025, last day of April. Today's episode begins with our headline negative GDP, Mr. Market Revs engine, and Robschild buys a stock. In a nutshell, the only way I can make sense out of today was that Mr. Market was expecting worse news than what came out. We had a ton of economic news drop today. We will go through it along with charts and seeing how things are working together. Before that, I wanted to do the community topics. What moves, if any, did you make today? One of my subscribers reached out to me and wanted to know my opinion about a certain company, a stock, SPRS, the ticker symbol. The company name Surge Components. It's a company that makes capacitors and other electronic components. A pretty small company. When I looked through its financials, it just looked like a really great opportunity. In my book, this is exactly the kind of thing that Benjamin Graham himself or Michael Burry, especially in his early days, would be buying at the current price of around $2.10, I think, today. Anyway, it has a long enough track record of positive earnings, so it's a real company that makes money. And there's an oddity on its balance sheet. Its current assets, which means basically the cash that it has, outweighs its total liabilities. So all the money that the company owes, it currently has more money than all of the money that it owes by a whopping $18 million. And the market cap of the entire company is only $12 million. So if someone were to buy this entire company at its current price being $12 million, and they liquidated the entire company, they paid off all the liabilities, they would have $6 million left for themselves, a 50% profit, guaranteed. While this opportunity does not come without its risks, like the company, for example, deciding to continue doing business and potentially losing money and potentially wearing that $6 million down to nothing, this still counts as a bargain deal by Benjamin Graham's own methodologies. The icing on the cake is that the earnings has been pretty solid for a while here. So for me, this is free money. I put all of the available cash I had in my account into this stock today, and it now is representing 0.5% of my portfolio. I will be buying more of this, as much as 5% of my portfolio, at its current price of $2.10 or below. So that's what I did today. If you made any moves today, what did you do? Comment in the comment section below. Coming up, we still have some big earnings coming out for this week. As I said yesterday, 20% of the S&P 500 is by market cap weight is reporting their earnings this week. We have tomorrow Amazon, Apple, and MicroStrategies. We also have coming up continuous tariff updates as always. Who knows how long this is going to be going on for. It looks like it may be going on for a very long time. And then Friday we have the very important jobs report, unemployment report. Based off of the ADP numbers coming out today, holy moly, it looks like unemployment to me is about to skyrocket here. Before we look at the data and the charts, thank you for watching, subscribing, commenting, and supporting. The subscribe button it's right over here. You just click on it. These are the daily reminders and my macro views. Check out the description of my video. Click the link to read my website. And it explains all of these very important things. No changes to the crystal ball ratings, and the Robschild portfolio simply added SPRS today. On to the data and the charts. Starting with the economic data dropping from Market Watch, we have a lot of stuff that came out. One of the main things is ADP employment coming out at half of the expected jobs added to private payrolls. The expected was 120,000, lower than the last of this 147,000, only 62,000, very, very low. The GDP for quarter one of 2025, as I said on Friday, and as the Atlanta Fed Now tool had predicted, it was negative. So that was already known by most people that are paying attention. But yes, this is the first negative GDP in a while. And then we had consumer spending actually do an uptick. I don't know if this is partly to do with trying to get ahead of potential tariffs, although it was, not really a big thing in the news and the tariffs until really after quarter one. It's arguable. But anyway, the PCE headline came in at flat for over the month. So no inflation for month to month, but year to year, 2.3%, a tiny bit higher than what was expected. And the core month over month, lower than expected at 0. So apparently the worries of inflation outweighed the fact we have negative GDP. I don't understand how this can possibly be good news, but Mr. Market went up today anyway in the S&P 500. We also have this headline from Market Watch: U.S. businesses pull back from hiring due to unease about outlook, ADP says. So companies are hiring less people because they're already worried about the future. And if you know how that works, it sort of plays into itself. That's why when the snowball starts rolling down the hill, it just gets more and more snow. It seems more obvious than ever that that's where we're at, but Mr. Market just doesn't care. The S&P 500, although in a pretty decently large range today, ended the day 0.15% higher. This is supported by the advanced decline line, so all stocks got a bid today. As dumb as I feel like Mr. Market's getting here, at least he went more into healthcare and consumer defensive, which is the smarter thing to do at this point in the cycle, in my own estimation, while consumer cyclical, which means stuff that people don't need, losing some steam. While the S&P 500 eked out a bit of a gain today, we saw a bit of a drop in HYG, my favorite way of keeping daily track of junk bonds. This takes the legs out of the market. I think that it's very important to realize that crude oil is absolutely collapsing right now. We're currently sitting, as I'm recording, at $58.38 a barrel. This makes it a lot less viable for oil companies in the United States to make profits. The oil market here right now is stating that it sees the slowdown. The stock market going up with all of this going on is very perplexing to me. It seems it was very perplexing to Dr. Copper with a PhD in economics as well, because copper dropped by a whopping 5% today. Whether you want to look at the fact that we now have 5 cuts priced in for the rest of 2025. 1, 2, 3, 4. Oh no, it's still 4. I swear last I checked that it was 5. Anyway, if you want to look at that, if you want to look at the fact that we're back into an inverted state on the 10-year minus 3-month Treasury, or if you want to take a look at the 2-year Treasury note yield itself dropping, it is all saying that lower rates are coming. They are on the way. Here come the lower rates. One thing that may have slipped under your radar and has maybe slipped under a lot of people's radar, not something that's widely talked about, but I think is very important, the velocity of M2 money stock actually dropping for the first time since we bottomed when in this little dip here in Q2 of 2021. We have been going up in M2 money supply velocity. In other words, how fast money is moving from hand to hand, while Q3 of 2024 to Q4 of 2024 stayed exactly flat at 1.387. We ticked down for Q1 to 1.383. Now, while this is not the biggest deal in the world, it simply says that the velocity of money is not continuing higher. It is contracting right now. And while you can have contractions of velocity of M2 money supply happen without a recession, during recessions you always have a contraction of the velocity of M2 money supply. The VIX futures curve and the VIX itself are still saying that we are in a danger zone. We are above 20 in the VIX. We had a bit of a spike in relaxation in the VIX, but for me, this is winding up for another leg higher in the VIX and another leg down in the stock indices. Jerome Powell himself talks about the break-even inflation rate. This is how the market is pricing future inflation expectations. The 5-year break-even inflation rate is not going up, despite what you may be hearing about tariffs raising prices in the United States. Same thing with the 10-year break-even inflation rate. TLT, my favorite place to be, went down a little bit today. However, this candle is called an inside candle. This is in a bullish larger formation, and it's inside of just the previous day's green candle. This is extremely bullish looking. TLT should be continuing higher from here, especially considering that crude oil is absolutely collapsing. When crude oil goes down, typically yields follow. This is very bullish for TLT. Admittedly, at this point, I probably got into long duration treasury bonds sooner than I should have. Maybe I should have waited for at least yield curve uninversion. But, I mean, come on, you got to give me credit. Like, 2 years, 2.5 years of inversion, that's like never happened before. Anyway, I digress. That's not an important part of the show. What is starting to look a little important is Bitcoin. We have been going flat for quite a while. This is ripe for a breakout, and I am not sure if it is going to break out to the upside or to the downside. The chart says it's going to break out to the upside because this is a bull flag. But the shape of this flag is giving a lot of chartists that are better than me a little bit of nervousness and are staying away from it because of that. Typically, for a bull flag, you want it to either be flat or actually going down little by little. Instead, you have a rising flag. So we'll see what happens there. Next, we have gold XAUUSD. I love it when I draw on my chart and then the next day it literally follows the line that I drew to a T. Gold on a closing candle basis looks like we may have broken down to the downside. Again, I'm looking to exit my gold short below 3,200. Next, we have SMH. I added a little line just to make it more clear here that we still haven't had a closing candle above the retest candle of this very long neckline that started back in January of 2024 of this ginormous head and shoulders top formation. This is why I actually still have a pretty large position for short positions anyway in SMH using SOXS. On a daily basis, the bulls are not in control here. The bears are still in control. And for me, it's just a matter of time before this goes to the downside and we get to our eventual target. And the target of that head and shoulders pattern is $123 on SMH. Lastly, we have MSOS. If you've been following the show, you know that I am an investor in this fund of swaps for cannabis stocks, and today we went up by 12%. So yeah, I don't know if it's short squeeze or good news out of California or something. But anyway, just wanted to mention it. I'm astounded at how low that thing was able to go. And maybe we have a bottom here, but I don't know. What do I know? I'm just a guy with a crystal ball. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.